All right, gold and silver are both pacing for their best week in 5 years. For more on that recent rally and his outlook for the precious metals, we want to bring in Daan Struyven. He is co-head of global commodities research at Goldman Sachs. And Don, you recently brought up your price target for gold, the price you expect by December of next year. What'd you say, 4,900 instead of the 4,300 that you'd been at previously? What made you say, aside from just watching how quickly things are running, hey, we better get ahead of this?
The main reason is that the drivers of this huge rally in gold is sticky inflows, both from private investors with long investment horizons and central banks. It's not driven by mean reverting, noisy spec positioning.
So it's not retail day trading type of situation?
Yeah. We're really seeing significant client interest from real money with long investment horizons, asset managers, pension funds, sovereign wealth funds. And so this big diversification rally in the gold market that started with central banks in 23 and 24 is now broadening. Central banks are not only accelerating the pace of purchases after the seasonal summer low, you're also seeing an inflow from investors with a strategic long-term allocation. And I think the risks to our already bullish forecasts of $4,900 by the end of next year are skewed to the upside.
Really?
Because we don't incorporate in our base case the boost to ETF gold inflows from private sector diversification. Our bullish forecast is driven by central banks diversifying and by Fed cuts boosting ETF inflows. But the upside from private sector diversification is very large. The key intuition is that the gold market is small. It's about 70 times smaller than the U.S. Treasury market. So only need a relatively small diversification step to cause a lot of upside.
So you're basically saying momentum could drive that even further. This is your outlook without really considering momentum?
Without really considering the possibility that investors significantly raise their strategic allocation to gold in an environment where the policy outlook and the geopolitical outlook is likely to remain uncertain.
What is the risk to your bullish outlook for gold?
It is really, really quite high. The rule of thumb is that
no, I mean, what's the risk? What could take that down?
The downside risk. Okay.
Yeah.
So the main driver of a bullish forecast is really central bank buying. So mechanically, we have about 15 percentage points of upside from central bank buying. So mechanically, the downside risk is that central banks stop buying or start selling. History suggests that these central banks' gold buying cycles tend to be very long, and they don't start selling unless you have a significant easing in either risk related to sanctions, geopolitical risks, or risk related to global fiscal policy. And neither of those risks seems to be easing in our base case anytime soon.
Yeah, I guess the risks to the idea that the tariffs would come down would basically be a change in administration, and that's not happening for quite some time.
Yes, I think what are the fresh catalysts of the latest rally? I think uncertainty about trade, credit, regional banking, fiscal policy, seasonality of central banks, buying, major investors recommending a higher strategic gold allocation. I think the main driver still of our bullish forecast is central bank buying. And for that to change, you would need to see a sea change in the risk of sanctions on central banks.
Don, we got to run, but you're bullish on silver as well? You think that run continues?
We think the medium-term path for silver prices is higher, as Fed cuts should also boost ETF inflows into the silver market. But the outlook is more two-sided, more volatile, because the silver market doesn't have this structural central bank bid, and because part of the rally is driven by the squeeze in the physical London market, which is tight and which could reverse.
You can't explain silver through gold. You just can't. And some people think silver has more reason because there's all the industrial demand for things that silver goes into. But
historically, they move together.
I know, but it's
investor inflows move together.
Genuine.
But fundamentally, to your point, the driver of the gold rally since 22 is central banks. Central banks are not buying silver. So we think the bullish outlook looks more certain.
Did the Hunt brothers have kids? Maybe it's their grandkids.
I don't know, but the recent rally is a reminder of history which suggests that silver is more volatile than gold.